I just went from zero to a $500,000 trader in just 2 weeks. In today's video, I'm going to explain to you my exact process that I used to pass a $500,000 funding challenge with a company called First Class Forex Funds. I purchased my $500,000 evaluation, passed it in a week and a half, and I'm going to show you exactly how you can do the same and become a funded trader. In today's video, I'm going to give you all of my tips, secrets, and tricks that I use to find high probability and high winning profitable trades that you can replicate on the markets to become an official professional funded trader. What's going on, awesome people of YouTube? Jay here from the Millionaire Mindset YouTube channel, and on my channel I document my journey on various ways that I use to make money online, from trading to dropshipping, e-commerce, drop servicing, affiliate marketing, cost per action marketing, and building a brand and a business around content creation. If you want to get a daily notification from me sent to your phone every time I upload my latest way of how I use to make money online, make sure to go down below to this Millionaire Mindset YouTube channel, subscribe with the red notification bell on so that you don't miss an update. All of the information that I teach on my YouTube channel is completely free for you guys to go and watch, as my full-time thing off of YouTube is trading. That is where I make the majority of my money, so I don't need to go and charge for $1,000 or a $2,000 course here on YouTube. I purely enjoy creating content and building my own brand. As per the introduction of today's video, I'm going to be showing you how I became a $500,000 professional trader with First Class Forex Funds, and how you can go and do the same and apply for any one of their evaluation packages. FirstClassForexFunds.co is one of the leading industry concepts in prop firm trading. You can get funding of up to $1 million and receive up to 90% of those profits. I'm not going to go too much detail about them because I want to get to the juicy stuff a little bit later. But firstly, what you need to go and do is, if you want to become funded, is sign up with a prop trading firm. Now, I firstly advise, before you go and apply for your first evaluation, you need to have some kind of trading experience, or at least be a profitable trader. The evaluation consists of 2 phases that you need to pass before you get your live account. That is phase 1, which you need to achieve 8% of your account size in 30 trading days. Once you pass that, you go to phase 2, which is 5% of your trading account size in 30 trading days. For example, if you're going for the $500,000 account, you need to make $40,000 profit on the evaluation phase in order to pass to phase 2. Once you're on phase 2, you need to make the next target of $25,000 before you go and get your live account. You will need to pay a refundable registration fee of anywhere between $205 and $2,400 depending on your account size. You can get funded from anywhere between $25,000 and $500,000. The maximum being $1 million, which means you are allowed 2 $500,000 evaluation and live accounts at the same time. I'm currently in the process of passing my second $500,000 account, which would mean a total of $1 million funding. Once you've signed up for your evaluation, you will receive an email with your login details to MetaTrader 4 or MetaTrader 5, where you can go and start placing your trades. To the juicy stuff, how I actually analyze my charts and how I place my trades on my evaluation accounts and my live funded accounts. I'm going to go and use the example of gold in today's video, as this is a pair that I mostly trade in the US session. Firstly, you need to pay attention to this part of this video if you really want to succeed at this and become a funded professional trader. I operate on 4 main time frames. High time frame on the 4-hour chart, refinement down to the 15 minutes, and then the 5-minute and 1-minute chart for entry confirmations. My chart consists of 1 indicator. That is called Sessions D. If you come over to indicators and you go and search session, it will be this first one at the top, or the third one at the top over here, Sessions Asia, London, New York, and tells you when the different trading sessions of the day open up. The 2 main sessions I only trade is London session and New York session. London session being this yellow section, the red section being the US session. Within the London session, you want to mostly be looking at Europe and Great British Pound pairs because they are most volatile in those sessions. US session, I mostly look at gold or US 30. London session, I usually look at Euro USD and Great British Pound Japanese Yen. Like I said, this is very important that you follow this part of this video, because this is where the juicy and the most valuable information that you can possibly receive as an aspiring trader today here on YouTube. Firstly, on the 4-hour chart, as you can go and see, the market is currently very bullish. The market is breaking higher highs, tapping into demand zones, continuing higher, breaking higher highs, tapping into demand zones, breaking another high, tapping into a demand zone, continuing its move up, and so forth and so forth. So as you can see, as of today, at the moment on the 12th of December, the market is in a very bullish mode. It is always important to understand the higher time frame analysis in order for you to get high probability setups on the lower time frame. So the first thing I will go and look at is the most recent break of structure. Understanding we are currently in a bullish trend doesn't mean we just have to buy the market. There's been plenty times where I've been shorting and selling in bull markets, and many times where I've been buying and placing long positions in bear markets. Now that we understand trend, the second part of my system is supply and demand zones. Not just any, but unmitigated supply and demand zones. So the most recent break of structure would be this low over here, which I'm going to highlight as a break of structure. The market broke this lower low, causing an unmitigated supply zone to form, which was the last up move that formed inefficiency and the fair value gap. Yesterday, this point in the market was mitigated in the US session, which was a perfect opportunity for sells. We have another break of structure over here, causing a higher high, which was formed by this demand zone down here, which we can expect a mitigation into perhaps later in the day or tomorrow or later in the week. So let's go and highlight this as the demand zone, because this wick over here was the last down move before the big up move that formed inefficiency, that has formed liquidity below this demand zone over here. We can definitely expect the continuation of the bullishness from this demand zone over here, but nothing is stopping us from looking for shorts to this demand zone. So if we go and have a look more closely and more recently, we had a break of a lower low over here formed by the following supply zone. I just want to set this as a break of structure, formed by the supply zone over here, which is currently about to become mitigated, because this was the last up move that formed a down move and a big inefficient push that caused the break of structure, which you'll see over here on the 15-minute time frame has formed quite a lot of liquidity in this area just below this demand zone, where hundreds of thousands and millions of dollars in orders have been placed, and we can go and expect the market to go and sweep this liquidity to collect all of these funds. Thirdly, we need to go and refine our 4-hour zones down to the 15-minute chart, which you'll see over here. If I come up to our initial supply zone, this is our giant 4-hour zone over here, which my refined zone would be the supply zone, which too has already been mitigated yesterday afternoon. And take a look at the beautiful offer opportunity over here that we could have looked for shorts. This following area, I would take this supply zone over here, as this was the last and most recent up move that caused the big down move, the break of structure, the liquidity, which we can also expect to mitigate perhaps later today in the US session, which is just starting in an hour. So we can definitely prepare to look for shorts from this supply zone to longer demand zones further down here. On the 15-minute time frame, we repeat the same process. Our most recent break of structure, which happened over here, let me just delete this liquidity point. Break of structure, which was caused by this demand zone over here, which we could perhaps look for a retracement into the zone to continue to the supply zone and look for long positions from here. We repeat the same process on the 5 minutes, and we refine our 15-minute to 5-minute zones. So over here, that would be my most recent 5-minute zone, which was the last up move that formed the inefficient push that caused the break of structure. All I would like to see is perhaps a confirmation for this demand zone is more liquidity building just above the zone for the sweep, the tap in, and the continuation higher. There are 3 main criteria that you need to take into consideration before highlighting any supply and demand zone. It must form an inefficient push, a break of structure, and there must be liquidity building above or below that zone. You can't just go and highlight any random supply or demand zone, such as this one over here, such as this one over here, because you're just going to have too many, and there's going to be what you call a pajama stripe effect on your chart, where you absolutely just confuse yourself and you have no idea which zone to go and look for trades from. I always take the most recent candle that has formed the break of structure, the inefficient push that is forming liquidity, and if the market tends to go and break this supply zone like this, then we know supply is now in control. The market would have formed another supply zone up top here to mitigate the supply, form a change of character, and to continue lower to lower demand zones. The number one thing you always need to remember in trading is never predict always react on what price gives you. And that is exactly what I want to emphasize and what I'm showing you today. If price reacts off this demand zone, forms a change of character, there is our confirmation for an entry to go long. If price breaks this demand zone, forms a supply zone, taps into the supply zone, forms a change of character to continue for shorts. So simply, it's a game of reacting on what price gives you instead of trying to predict. Understanding our higher time frame bias that we are in a very bullish market, we can definitely expect the market to overpower supply zones, breaking supply zones, causing demands to be in control. The market perhaps coming back to these demand zones for the continuation higher. This is what I would at least to expect from gold in the next couple of days. But again, it's just a matter of reacting instead of trying to predict. So this would be my current setup on gold. I would wait for price to reach either one of my zones. I would set an alert over here on this demand zone, and I would set an alert at the supply zone. Look for a confirmation entry, which would be your change of character. A change of character is the following. For example, if we are reaching up to a supply zone, there's liquidity forming. We have a mitigation of that supply zone, sweeping all of this liquidity, the market reacting, breaking a structure, causing a break of structure over here, leaving an unmitigated supply, and our entry would be on this supply zone over here with your stop loss above that supply zone, your TP point at the next unmitigated demand zone. So this would be my entry criteria on the supply zone if I get a confirmation. Same criteria on this following demand zone. I would wait for price to form liquidity below this demand zone over here. A sweep of that liquidity, tapping into the demand zone, forming a change of character, breaking that structure, leaving an unmitigated demand zone, tapping into that, continuing the move higher. In that case, I would place a long on this change of character, running my TP point to the next unmitigated supply zone. Again, it's a matter of reacting on what price gives you. Using the strategy on my valuation $500,000 account is exactly how I achieved my target profit of my phase 2, where I made over $31,000 in just 4 trading days, where my target was $25,000. I then passed phase 2. All I'm waiting for is my $500,000 live account details to be sent to me. I've now been sent my certificate telling me I'm a first-class Forex fund professional funded trader. But before we go, I'm going to give you an entire trading course here on YouTube completely for free. More in-depth on my particular system that I use to go and pass my trading funding challenges and to become a professional funded trader. I could honestly charge at least $1,000 plus once off or $100 a month for this information in a private Discord or in a private mentorship area, but everything I am teaching is on my YouTube channel completely for free in one simple playlist. If you want to get your hands on that playlist, all I would appreciate is leave a like on this video, subscribe to this YouTube channel with the red notification bell on, comment down below that you're ready, and I'll leave a link to the playlist on the screen over here somewhere. So what I recommend is if you want to go and get that full course on my entire trading system, I'm going to leave my entire trading playlist over here. So make sure to go and click on this playlist over here, and I'll see you over there.